So today I'm going to do a React video on the skincare company Proven. Now I think this is interesting because I actually met with Proven a handful of years ago and we looked at it as a potential investment. We didn't ultimately get there. And you know, not to ruin the surprise, but neither did the sharks, although for different reasons. And we're going to talk about that. Let's dive in.
Hi Sharks, my name is Ming Zhao. I'm from San Francisco, California. I'm here to seek $500,000 for 5% equity in my company.
So Damon is already like, oh geez, this is an expensive deal. Because she's like right out of the gate asking for a $10 million valuation, which is expensive, right? And she's from Silicon Valley, so he's probably already thinking like, oh, it's another one of these Silicon Valley types with their super high valuations. Which, to be fair, like the sharks do not like venture-backed deals. I've found watching these over the years. I think because like they always look at it as like, how could you justify such a super high valuation on these companies? And they're always so arrogant, and they have no traction, and they're losing money, and blah blah blah. But the reality is, you know, despite what he thinks and the rest of the sharks, like there's some really great businesses that are venture-backed at, you know, seemingly high valuations, but with remarkable founders and kind of a unique story, unique product.
My company. Sharks, what is the one thing that we all search and pay a lot of money for? The youth of our skin. The problem is most beauty companies box us into four crude categories: dry, oily, sensitive, normal, even though our skin is really complex, dooming us into an endless cycle of expensive trial and error. That's why I took matters into my own hands to change the skincare industry once and for all.
Okay, so the premise here is there's a zillion skincare products out there. Everybody has different skin. How do you pick and how do you know which skincare product is right for you? And honestly, when I first heard this idea, I was like, this is actually like an interesting concept, right? Because everybody does have different skin. People have allergic reactions. They have all kinds of reactions when they use the wrong product. And so having like more of a tailored experience makes a ton of sense. Like I want to take care of my skin, but I don't know, one, I don't know like the best way to do that. And two, I don't know the best way to do it specifically for me, right? Because I see so many people have different experiences and different reactions to the same product, let alone the million that are out there. So on its face, I think this is like an interesting concept.
Introducing Proven Skincare. Using artificial intelligence and cutting-edge science, we create a personalized and effective skincare regimen engineered for your skin and your lifestyle. To assess your skin, simply log on to our website to fill out your free 3-minute skin intelligence quiz. Questions cover everything from your skin concerns to your stress levels to your locality, and even uncovers your pollution levels. Then, using our award-winning Skin Genome Project database, our scientists create your own Proven 3 skincare routine: a personalized cleanser, a personalized night cream, and a personalized day SPF, all packed with the right powerhouse ingredients for you. At Proven, we're using science, technology, and hundreds of ingredient combinations to create the product that works for you. Sharks, it is inevitable that artificial intelligence will be the future of flawless skin. So who is ready to shake up this industry with me?
And this is samples?
That's right. So based on what we know about you, Sharks, we've created products that are personalized to you.
Proven is for men as well?
That's right. We have about 20% of our customers are men. So Damon.
Yes.
So that's actually like pretty impressive, I think, that they were able to get 20% of their customers to be men. Because I feel like most skincare companies aren't anywhere close to that.
You travel a lot for your speaking engagements, so we put in ingredients to help protect your skin from the dry cabin air. Laura, you're on TV, taking out makeup every day, so we put in ingredients to help your skin protect your skin barrier. Kevin, Ontario has really hard water, so we put in citrus ingredients to cut down on the mineral deposits. And as a tech entrepreneur in front of your computer screen, phone screens all day, so we put in ingredients to help protect your skin from the digital pollution, HEV, and blue light. Mark, Dallas actually has really polluted air, so we put in ingredients to help protect your skin from the environmental pollution.
Thank you.
So when you invest in proven skincare, you're actually investing in a technology-first CPG company. The database is called the Skin Genome Project. It is the largest beauty database in the world, and it has won MIT's AI Technology of the Year award. But this is just the beginning. So we're gonna create this new category of personalized CPG and be the category killer.
Ming, the MIT database you referenced, I assume if I started Mr. Wonderful Skincare, I could also access that data, right?
No, it's proprietary to us. We built it ourselves, and we won the award ourselves.
Can you explain what that is, the skin genome?
So what we've done is we've taken all the available information that is out there, more than 20 million consumer reviews, more than 4,000 clinical research papers, gathered all of that, made sense of it, and then made insights and actions out of it. In this case, the first one is creating our own personalized skincare line.
So your technology essentially is going through all the different reviews that are out there in the publications and then synthesizing that into novel insights.
All right, so I'm gonna pause that. That was a long break, but okay, so here's like some of my concerns, right? One, she gives out all this product. She tells them like how it's unique and how they tailored it to them, but like it's so hard to prove it. It all looks the same. It probably all smells the same, feels the same. And it could totally be different, but it also could be like snake oil. It's just like really hard to know. So I don't know. I don't know how you overcome that challenge, but it is something that I'm thinking about. And then the other thing is she like throws a ton of buzzwords in here, right? The Genome Project. I think that she's really kind of borrowing that from Pandora, which had the Music Genome Project. There's actually no genetics involved in this. Based on what she said, right? She basically they look through a bunch of reviews, they look through a bunch of research papers, and then you get on and you fill out this quiz. And based on your responses on the quiz, like your age, gender, location, they formulate something for you. I don't know. I think it's interesting, but it implies that you're getting like genetic based results, which is not really the case here. So anyways, I don't know. She has a lot of buzzwords, which maybe that makes sense and that works from a marketing perspective, but I don't think the sharks are going to buy it.
That's right.
But then there's not actually any genetics or anything.
Right now there is not. With the genetic information.
I was getting excited.
Can you explain novel insights?
Sort of a novel.
So she was excited because she's the founder of 23andMe, the largest customer or consumer genetics company out there.
Like a brand new kind of idea or, discovery.
So our novel insight is trying to understand for different people, different backgrounds, different genetics, under different environments, different lifestyles, what ingredients work well for this subsegment of the population versus another.
Proven is a brand in the brutally competitive skincare market, of which there are massive players. Now, you have to explain that story, because nothing explains what you just said. That's going to cost a fortune to do that.
The skin.
Okay, so I want to break down what he's saying there, because I think it's super important. So if you've got a company and you've got like a unique special solution, you have to figure out how to communicate that to customers. It's not always the best mousetrap that wins. Sometimes it's like not even a very good mousetrap. I'll give you an example. So we looked at this company years ago called Contour, and Contour was a competitor to GoPro. Contour, in my opinion, was superior to GoPro in every way possible, and I own a GoPro today. Contour was cool. It was sat on the side of your head. It shot out a laser so you could level it. It had a very easy and clear to use like switch to turn it on and off. The video quality was better. The audio quality was better. I mean, it's just like better all the way around, especially when you compared like having like a toaster strapped to the front of your forehead. From a usability perspective, it was better. It was just like, they had like an app with like wireless capabilities, and this was well before GoPro had anything similar. It was a better product. But GoPro was amazing at marketing. and could tell their story so much better than Contour could. Contour like had to explain how they were better than GoPro, whereas GoPro just had to like show really cool videos people had shot, and that worked really well and outsold Contour. And ultimately, Contour like just really couldn't compete and ended up getting sold at kind of a fire sale. So what Mr. Wonderful is saying essentially is like, you are operating in the space. There are a zillion competitors. Some of them are incredibly well funded. They know how to play the marketing game here. And to the level that like, it doesn't even like matter to a certain extent what's in the bottle. What matters is what's people's perception of it. I'll give you a good example. Strivectin. They're in the skincare space, right? So when they launched as a super premium product that was, effective at removing wrinkles or reducing wrinkles. And they sold in the Sephoras of the world and the Nordstroms at a very high price point, blah, blah, blah. Fast forward a few years, they started selling in Costco. Well, here's the funny thing. The product, exactly the same. Costco, Sephora, back exactly the same. The only difference is that Costco was substantially cheaper. Doesn't matter. Customers would still buy it from Nordstrom and Sephora and swear that it was more effective than the Costco version. So, like, there is so much, like, marketing and perception that's, like, built into these things that's so important. And here she has this company where she's going up against all these huge incumbents with big budgets. And her big disadvantage is also her biggest advantage, which is she's got this, proprietary, algorithm that allows her to create customized products. But at the same time, she's got to be able to communicate that to people. And so she's got to get people's attention long enough that they will hear her message and they will understand it. And to do that, you basically buy people's time and attention with marketing dollars. And so what Mr. Wonderful is saying is like, if you want to be able to compete in this space where there's already so much money and so much messaging that's going on, and vying for people's attention, you're going to have to spend a lot of money to get in front of people, to buy people's attention so that you have a chance at communicating your value proposition. This feels like a very cash inefficient business to him and, frankly, to me.
Science is what we always call kind of the voodoo science. There's a lot of money in this space, but I haven't seen a lot of really rigorous studies.
Heard of proven before?
No.
That is exactly what we're doing. Starting with the database, we then partnered with the head of dermatology at Stanford University to then actually distill from the data what are things that he's seen in his clinical research.
I have no idea what you're talking about.
What'd you say?
Let's go to sales.
$500,000 for 5% imputes a $10 million value. So I'm so excited about your sales. They're going to be.
But so, like, that's kind of funny that Damon's like, I have no idea what you're talking about. But it kind of just reinforces my earlier point, which is if he doesn't really get it, and he's like a sophisticated investor, to a large extent, what chance does your average customer have of really understanding what Proven is doing, right? And she's got his full time and attention right here for like probably at least 30 to 60 minutes of their time.
Great.
Sure. So we were in our beta trial for 2 months earlier this year. We gained $110,000 in sales.
Where were you
And from
selling?
what channel?
We were selling mostly through digital channels, through Facebook.
Facebook ads. How much did you
Facebook ads.
spend to get that $110,000?
So we spent about $90,000 to get to.
We spent $90,000 to get 110.
That's right.
Okay. Then what happened?
And then 4 weeks ago, we relaunched a new website with new branding.
Right.
And this month, we're also on track to do about $65,000.
I'm really working with
I
this.
forgot to mention one thing that you would
I've been
love,
taking
Kevin.
anger management. So
I forgot to mention one thing you would love. We also have a licensing agreement for $3.5 million.
$3.5 million?
That's right, to use our technology. They want us to create a adjacent category database in the baby care space.
That's interesting. If you really have something proprietary with data that you can sell other large players in the skin space, and you can get $3.5 million license deals, Mr. Wonderful's your man. But this bit.
Okay, so so 110,000 in their beta. They spent $90,000 to acquire that. They're basically paying almost $1 in marketing for every dollar that they generate in revenue. That's a big problem. Let's say their product sells for $100, and let's give them like benefit of the doubt 75% gross margins. Now that would be that would fall under kind of the basic rule of 4, which is because they're selling direct to consumer, they're going to mark it up, 100% from cost. So if it costs them $25 to manufacture the product, put it in the packaging, and ship it off to the customer, if it costs them $25 to do all of that, you mark it up by 100% for wholesale, so that's $50, and then another 100% for the wholesalers to sell it to the retailers essentially, or to consumers, so that's another 100%. So let's say we give them benefit of the doubt, 75% gross margins, which probably at their scale they're not getting. At that rate, you're spending almost, let's say like 90 cents. So like right out of the gate, you are in the hole $1.65, right? So gross margins at 75%, it costs them to acquire like let's say 90 cents for every dollar they generate. So if they sell a $100 box, it costs them $90. So they're generating $10 against their gross margin of $75. So they are in the hole $65. That means every time they sell this product to a new customer, they are losing $65, let alone the fact they've got to cover their fixed costs, which are all of the salaries of these people that went to Stanford and MIT, which are not going to be cheap salaries, and overhead, and everything else. So yeah, that's why the sharks are kind of like shocked. Now, he does bring up an interesting point, and that is this whole idea of the licensing business. Here's the problem with the licensing business. On the one hand, $3.5 million, great. But the problem is if you listen to what she says, it's not based on their current database. They're going to get paid $3.5 million to build a new database for babies. So they can probably reuse some of what they built in their current database, but they essentially have to start not completely from scratch, but almost from scratch to build out this new database. So it's not the problem with that is like that's cool if you want to be like a consulting company or a services company and then just build databases for other companies, but that's not really like exciting from an investor perspective, and frankly you don't really need to raise money for that. What would be more interesting on the licensing side, and this is exactly what he says, is like if you were licensing your current database, what you already have, to other companies, so like you didn't have to go out and recreate the will every time somebody wanted to license it from you, that would be interesting. The problem with that though for her is that she can't do that, because if she does that, she effectively pivots her business, and she can't really do both. She can't do both her own skincare line and license it to competitors, because then she gives up her one thing that makes her special and differentiated. And so she kind of has to choose. Is she going to go all in on licensing, or is she going to go all in on selling skincare products? And the thing is if she goes the licensing route, well, the margins are super high, but she's not going to get paid a whole lot. Like, ultimately licensing agreements are paid, we're going to pay you pennies on the dollar of everything that we're going to sell. If we're going to take your product, we're going to license it, and then we're going to sell it for $100. We're going to ultimately only pay you a couple bucks for that. So her market as a licensing business is much smaller, and also not like super attractive for investors. Although Mr. Wonderful, he does love those licensing deals. If she builds her own skincare product based on her technology, then she can build a much bigger business, because the market is much, much bigger. But it's a lot harder to do for all the reasons we've already talked about.
Business, the chance that you will get share in this space is so small, it is so competitive, they will crush you like cockroaches. So that's a huge
How do you feel about that, Ming?
Because we have...
I mean, he's right. It's like the risk here that they can be successful there's a lot of risk. It's just not very likely given how many players are out there that are, competing with her.
Because we have greater ambitions. We're trying to be a technology-enabled CPG company. And how many of those can you think of? None.
But Big, I have been pitched at least 6 AI-driven cosmetic companies in the last 6 months.
But did they win MIT's AI Technology of the Year award? Do they have any proof?
Just because you win an award, I mean,
and it's
you know how
been
many
proven
times...
and tested out by many, and it's been seen.
Ming, while we're still on the numbers, though, let's.
Okay, so I mean, that's pretty damaging because she's like, hey, we're super unique. And Mark is like, no, I've seen 6. Like, you're not unique. And frankly, like, the idea is kind of an interesting one, but it's certainly not unique, right? Like, everybody knows that personalized skincare needs to become a thing. And so it's not like a novel idea. Her arguing like, hey, our database is better than anybody else's because we won an award is like, okay. But what he's saying is like, doesn't matter. What really matters is what do customers say, right? Like, is it actually creating a competitive advantage or is it just lipstick on a pig?
Let's go down the numbers. So, okay, how much money have you raised?
We've raised $6 million.
Oh!
Wow.
Yippee-yi-yo-yay! This story is...
Okay, so let's talk about that. Why were they all like blown away $6 million? Well, I can think of a few reasons why I would be, rolling my eyes if I were them. So, on the one hand, what have they accomplished to date? So, the sharks don't really believe that the skincare genome project that they've built is actually anything super unique or super hard to do. Whether it is or not, like, that's their perception. And that's pretty clear when you're watching this. The other thing is they've raised $6 million and they've only generated $110,000 in revenue. And so, they're probably looking at this like I do, which is like, hey, if I'm going to raise $6 million, I should be able to generate a multiple of $6 million in terms of revenue. Now, that's not always the case because if you're doing a startup, like you have to build the product and that can take a lot of time and energy and money and so forth. And there's certainly elements of that here too, right? I mean, she's probably pushing much higher volumes on a lot of the stuff to try and drive down the price point as much as possible. And that requires a large upfront cash payment to do that. So, that piece, you can maybe give her a little bit of leeway, but when you compare it to most of the deals that they look at, where the founder has put in like 10, 20 grand of their own money to get it off the ground or raise it from friends and family and so forth, like $6 million, oh, it's rough. The other thing is, it also speaks to the valuation, right? And how much money is already in there and how much dilution there is and so forth. This is ultimately, I think, going to become a pivotal, critical piece of the overall deal. Because they know if she has raised $6 million, she didn't give up 100% of the business for that $6 million. So valuation is already going to be in excess of $6 million. She's probably trying to give them as good a deal as she possibly can at this $10 million valuation. Because my guess is if you raise 6, you probably did it at a higher valuation than 10 million, because in that case, she'd only be left with 40% of the company. And most entrepreneurs aren't going to sell that much this early. So I think a lot of the sharks, this is like the point that kills the deal, because theoretically a shark could come in and say, look, I love the concept, I love like your background and so forth, but 10 million is too much. Let's cut it down to like $1 million. But if she's already raised 6 million, they know that's not going to be on the table. And so why even bother, right?
Very unusual. Let's take your sales this year. Let's just be the most optimistic we can be about Proven. Give it to me.
We're projecting to do $3 million the fiscal year.
Wow.
Your customer acquisition is the cost of sales. You can make 110,000 in sales, you spend 90,000. It's almost 1-to-1. So you don't care about that, except you got to raise more dough.
Right.
Next year on the 3 million, you think you'll break even?
Not yet. We'll
So
break
wait, so
even the year
effectively
after.
on your next year's $3 million, you were planning on spending $2 million or so in advertising, correct?
That's right.
Okay.
So
So
the-
you're buying your sales. So it's one thing to say, my technology is amazing, but when you do that, there should be customer referrals. You're saying effectively that you're not expecting anything from your existing customer base because
That's
you're having
actually
to buy
not
all your
Okay, so that is a great point. And actually, let's see how she responds.
sales.
It's a business decision we're making to keep on experimenting with new channels, new methodologies. If we want to be profitable next year, we can be.
Okay, so here's where I think my feedback to her is like, that is not the right answer I would have given. And in her defense, the people that chopped up and edited this thing may have edited out the answer that she actually gave and slotted in the one they thought would be more spicy. But he's basically saying you are going to go out and you're going to basically give people $1 to use your product, right? We're going to spend so much money that we're on marketing that we'll basically like just convince them they got to buy our product. But in order to do that, we got to spend $1 for every dollar we generate. And that the technology that she's touting that's so special is not going to be special enough that people are going to come back and buy more, and they're not going to refer it to their friends. Because here's the thing, this is where the business actually could work. Let's say it does cost you $1 to acquire a customer for every dollar you generate. Does that mean that it's a bad business? Not necessarily. If that person comes back. So if you look at it across their lifetime as a customer, then it could make total sense to spend $1 for every dollar you generate. So I'll give you an example. Let's say that 50% of her customers come back and buy from her again the next month. And the next month after that, 50% do. And the next month after that, 50% do. And then they all drop off. Well, in that case, you generate $1 in month 1. You generate 50 cents in month 2. You generate 25 cents and then 12 cents. So here you're almost up to $2 of revenue from that one customer, and it costs you $1 to acquire them. Well, in that case, it could actually maybe make sense. Now, you'd have to look at your gross margins too. When you start playing with the gross margins, you get close to about break even with that customer. So she's got to figure out a way to increase or make sure that she has really good recurring revenue on a subscription basis from her customers. Now, if the product works, right, then this is totally the type of product that people come back and buy more of, right? Like, people are gonna, it's a consumable product. They're gonna use it up over the course of a month, and if it worked, they're gonna come back and buy it again. That is the data that she should be touting all day long in this pitch. And if she doesn't have it, that's where she should be generating the data and doing the tests. Not testing like which platform makes more sense, Facebook or Twitter or Instagram or YouTube or TikTok. Like, what she needs to be able to prove is that her product works and that people come back and buy it. If you can demonstrate that, you can demonstrate really high lifetime value, and then that allows you to justify very high CAC. If she had come in and said, look, our lifetime value of our customer is $1,000 per year, or, you know, over their lifetime, then she could make a very compelling case that, like, yeah, we spend $100 to acquire that customer, which is the same price of what they spend in that first month. But it is totally worth it because we're making 10 times our cost to acquire. But she doesn't do any of that here, and at least in what we can see on this video. And I think that is the other place in which she starts to lose the sharks.
So Ming, so I'm really not in the skincare stuff, you know. My mommy gave me some great skin for my birthday. You know, it looks chocolate and everything. It's amazing. So I'm not gonna waste your time. I'm out.
Thank you, Damon.
Look, me, the AI stuff doesn't add up to me. I don't think that there's a lot of organic growth that's built into this. So for those reasons, I'm out.
Thank you, Mark.
I've spent actually a decent amount of time in this space. My company, 23andMe, we've actually done a number of partnerships looking at the genetics of skincare. I absolutely believe the world is coming where everyone out there is going to have personalized skincare. But again, the data's not there yet. So for those reasons, I'm out.
Thank you.
Listen, Ming, I think you have a good idea, but I think it's just way too early for me. You are really just out of the gates. You've already taken in $6 million, and it's going to be a long time before I would see back my money. I'm sorry, I'm out.
Ming, I thank you very much for coming here today because you are living proof that my anger management training is working. Because what I wanted to do was shred you to pieces. This valuation is absolutely ridiculous, but here we are, and the answer is no. I'm out. Ming, it's very important that you leave now.
All right. Thank you very much.
Thank you.
Good luck, Ming.
Good luck,
Good luck.
Ming.
I feel like at the beginning of any innovation, people don't understand. They're always going to be non-believers.
All right. Just some other things that I thought were worthwhile talking about. Like, she didn't really talk much about her background or her co-founder. Both of them, you know, come from Harvard and MIT. lots of experience in data analysis and data analytics. Like, she should have been hitting on some of that. I already talked about how she didn't talk about the efficacy of the product. And if it really works, that should be a real driver in terms of driving real good lifetime value for her customers. But like, clearly, like, she didn't do a good job, even if she did talk about that during the cutscenes that we didn't see, because that was Mark Cuban's reason for not investing. So ultimately, like, it's not horribly surprising. Sharks don't love venture-backed deals. She's raised a ton of money. She didn't do a very good job of communicating the value of her team and what they had brought and what they had built. And they didn't do a good job of communicating like the efficacy of the product and what that could mean in terms of the unit economics of the business. That said, this was a total win for Proven, right? Because they got to spend, 10 minutes or so on national TV in front of millions of viewers telling the story, which is the hardest thing this company has, is to tell that story. And they effectively got to do that for free. So huge win for them to be on Shark Tank, even though they didn't take any money. And frankly, like, it's debatable whether or not that money would have been that helpful to them, because if they, like I said earlier, that $6 million that they raised earlier was definitely at a higher valuation than the $10 million. So they kind of got like everything that they wanted, other than like maybe it would have been nicer to have a more positive time on Shark Tank. If you enjoyed that react, check out some of my other Shark Tank reacts, like the one where I react to the Bouqs.